Okay, hi there. Welcome to a short video looking at the concept of turnover rents. We were looking at this in our economics class yesterday when we were thinking about the cost of production. For most businesses, the rent is treated, the rent you pay to landlords is treated as a fixed cost of production. Consider, for example, a coffee shop, such as Costa Coffee, bought last year, of course, by Coca-Cola. Now that shop probably rents or leases out their premises from a landlord, and a fixed cost must be paid regardless of the value of sales. We call that business turnover. So in this sense, the greater the volume of sales at the coffee shop, the fixed cost, the rent won't change, and therefore the lower will be the fixed costs of rent per customer. And that helps to make a business more commercially viable. Now, for many retail businesses in particular, rent is a major cost of production. The hotel chain Travelodge, for example, has an estimated £230 million annual rental bill on the land that they have leased. Close on £5 million a week due in rent. And that money doesn't really fundamentally change, that expense doesn't alter as the number of people staying in the hotels changes. So what is a turnover rent? Well, best definition I've found is this. The turnover rent is where the rent payable by the tenant, such as a retail business, a coffee shop or a hotel chain, to the landlord is calculated, the amount you have to pay is calculated either wholly or partly by the actual turnover, the revenue achieved by the business in each time period. Could be a month, could be a quarter, perhaps even a year. Here's a really good example of turnover rents in the news just recently. The popular fashion chain New Look recently reported, in fact, something like a 40% fall in like-for-like sales because of the impact of COVID-19. Far fewer people going up and down high streets, a little bit of increased online sales, but of course you don't pay rent on the online store. And so there's been a big fall in footfall and people in store. Now, following lengthy negotiations with their landlords, something like 400 New Look stores will now pay for the next period rent based on how much sales they take in. I was reading that it's something like the rent will be somewhere between 2% and 12% of sales on those shops. Well, these rents are not only likely to be lower than current levels, but actually I think more flexible. So obviously during tough times, the rent you pay goes down. And what this does is it turns the rent from being a fully fixed cost to what we would call a quasi-fixed cost. It's going to be really interesting to see if turnover rents become more widespread, particularly in the retail sector in the UK that's been so hard hit by the coronavirus pandemic. I think New Look's an interesting example because they have so many stores on the high street and in shopping malls. In that sense, they have quite a bit of leverage or market power with landlords. And those landlords are keen, of course, to avoid having a major retail player shut down and leave their shopping malls looking rather downtrodden. Smaller businesses might find it significantly harder to reach an agreement on a turnover rent. But this is an interesting idea, and it's definitely one worth thinking about and being on the lookout for when you study your business economics.